Ladies and gentlemen, welcome to a new episode of the FinTech Hunting Podcast. We have an absolutely incredible guest for you today. She's a seasoned mortgage industry veteran, a marketing whiz, a trailblazer in leveraging data to make strategic decisions, and now we can add to the list a author. So let me help you welcome to the show for the first time ever, Kelly Yale. Kelly, welcome to the FinTech Hunting Podcast.
Thank you so much. I'm very excited to be here.
Oh, well, it is great to have you. We'll get to your book and all that other fun stuff. But for my listeners who maybe don't know you, tell me a little bit about your financial background. How did you get into financial services and being the CMO and all of that?
Sure. I live in Charlotte, North Carolina, which is a pretty big financial hub to begin with. I owned a large digital and social media marketing firm and ended up taking a branch for mortgage on as a client.
Okay.
And doing a little bit of research about the area. And this is, by the way, and shout out to Casey Crawford, who still to this day gives me a little bit of elbowing about the fact that I actually met with him before I even met with this other mortgage company. And at the time I told him, I'm like, I don't want to work with him. Like, I don't want to do mortgage stuff. And he was like, okay, well, okay, that's great. Turns out I took on another branch about a year later. And when I was doing the competitive analysis for like the area, I was like, okay, well, just like sprinkle a little bit of sugar on it and you're going to get like a huge boost in sales. And then they said, okay, well, how? And I said, it doesn't matter how. You can add SEO to this website and make it the number one, website on Google. They said, you can't. This is, we got LendingTree, we got Bank of America, we've got Movement Mortgage. And I said, yes, we can. And surely did. And so like it depended on what strategy kind of we wanted to deploy. But that first year, it meant about $100 million in sales for the branch.
Oh, fantastic.
And then the next year it was like, well, what else could we do? Here we've redone the website, we've redone the social platform, redone the website, redone SEO, redone all the social. What's next? And I was like, well, you could just have a real director of marketing and you could put together like an entire marketing strategy combined with your CRM, which at the time, 2013, unheard of.
Nobody was doing.
And so we put that together. So then I started spearheading that effort, which is if we took your website and your content and your social and we had one branded message and one branded voice, what could we be? Well, we ended up being the largest lender in the country. I had 95% saturation with that system, and it meant, not that it directly was involved with, but when it's the system of record for a company, and they do about $65 billion in sales over 6 years, you're recruiting to it, with it, and saying, all of that. So I built that structure for a really long time, and then now I am incredibly fortunate to be able to work in many different systems, many different fintechs, and really trying to figure out a way to convey to people how important having a curated database can truly be. That's a long answer, but that's how I got here.
Well, I love it. And you have so many great experiences, expertise. I want to dive right back into it. So one of the things that you talk quite a bit about in the book, and we'll cover the book in a little bit, but you talk about data. So talk to me how data has transformed your approach to marketing.
So I am literally known throughout the industry as a data fanatic, to the point where, because I was so fanatical about it so long ago. So you go in a time machine back to 2014, 2015, it's me on stages, it's me telling people data, and no one would listen to me. And I couldn't quite figure it out, but what I decided to do was an experiment, essentially. So I started doing what I lovingly refer to as curating databases, which means segmenting every single piece of a database out into the actual appropriate journeys for those human beings and then keeping in front of them. So we had databases that have been curated for 7 or 8 years that have been under our control. Those databases will yield more business by far in 2024 than asking a referral partner for anything. And the only reason is it's because every single human being is likely going to need a loan, which means your realtors are going to need loans, refinances. It means anyone who's ever been a lead to you, if you stayed in communication with them, if you put them at the forefront, that all becomes actionable data. And then you take data intelligence and you just have the machine look at it and say, hey, here's John Smith. Okay. John Smith did a loan with you in 2016. He just put his house on the market. The system has taken the appropriate steps to let them know that you're ready to pre-approve them for the next house. Would you like to have this loan? That's what we build. And
I love that. And so let me ask, because
Sure.
I couldn't agree more with the approach and how important data is. But I see this all the time. Companies I'm working with, we're both fractional CMOs, we work with companies. Why do you think people don't take the time or effort to really manage and know their data? Whether it's on the vendor side, whether it's on the lender side.
So I call it, right, how we always do it. This is how we always do it. This is how we always did it. And I'm not sure I understand that refrain at all. Because I am my own boss, right? Right now, I am going through a database of 34,000 people. Just me myself. I'm not outsourcing it to, the Philippines. I am literally sitting down in front of it and having to segment it out myself. The reason is because I have a new consulting company and I want to make sure that I have the right audiences for the right messaging. I don't know why people are so afraid of that. Your average loan officer has a database between 5,000 and 8,000 people. I have literally for all of 22 and 23 been saying, while you're slower, segment your database.
Yes.
That's all.
Well, and I think part of it is, like you said, people, this is how we've always done it. I hate to say it, but people get lazy. Companies get lazy. And I see this a lot on the vendor side of, I'm like, well, hey, let's look at your database. Where did it come from? Oh, well, I mean, every trade show we go to, and they throw it in. They don't scrub it. They have all kinds of duplicates. They have duplicates of the same company, and one has ink at the end of it, the other one doesn't.
Yep.
And they wonder why they're not getting better results with their email or their text messages or any of their outreach. And it's because their database is, for the most part, just kind of haphazardly just thrown together with no real thought, and then they struggle why they can't pull data intelligence out of that.
I could talk for 3 more hours about clean data, about segmenting data, about speaking to individual segments in entirely different ways. The reason that the company that we had, which was originally the original CRM that we built upon, was called the Motivator. And
Okay.
Motivator's job was basically the following. I didn't want to create a CRM that a loan officer would sign into and go into and do tasks. I wanted to create an all-in-one solution where tasks that were mundane were automated and tasks that required action were already done by us. And this is why. And I say this with love because I've worked in the mortgage industry for 12 years and I love lots and lots and lots of originators. But we all know how often they want to go in and play with their CRM, especially when times are very busy. And so what did we build instead? We said, hey, here's a loan application. Here's what we can see. 1, this person is under the age of 30 and they're currently paying rent. That's a first-time home buyer. We know it's a first-time home buyer. And because they're under the age of 30, we need to market to them differently than we would to somebody who, let's say, is starting a family or doing whatever that is, right? And so let's make sure that they're on the correct journey to get them to not only stay with you and not rate shop you, but we're going to let you know when they rate shop you. And we're going to keep them with you. And then afterwards, we're going to make them one simple promise. And that is, for the rest of our lives together, my job is to look for the best possible situations for you when it comes to growing your wealth through equity. And then we don't send them chicken recipes and we don't send them inundate them with do you know what rates are this week? I closed on my house 4 weeks ago. What do I care what rates are doing? And also, who wants to hear from their mortgage planner every single few weeks with some other message? You should be striking when the iron is hot based on the data intelligence you have. This person should hear from you maybe quarterly. And even then, if you have HomeBot, perfect. Hey, this is how equity's growing. That's a perfect.
Exactly. And you're giving some information about what's going on in their subdivision. And they always kind of want to know that what are the houses selling for? How long were they on the market? Okay, great.
But there's no reason for like smart marketing is not blanket marketing. And I think the biggest sin of this industry is the individual LO blast email. I mean, because it's just like, hey, oh gosh, I'm going to send something to my whole database.
Right.
If people really knew how much money they lose from a blast email in terms of unsubscribes, when you think about the future of what that one person in your database could have yielded in terms of future loans and refinances, you are shooting yourself in the foot to send out a blast email.
Right. I mean, the statistics bear out, the average borrower is going to get 7 to 11 loans over the course of their lifetime. Let's just say its average home is 350 or 400. 85% of the people don't go back to the original lender.
Yeah.
So they miss out on loans 2, 3, 4, 5, 6. That's $3.5 to $4 million just for that one consumer that they missed out on.
And it's funny too, because one of the biggest sort of, before we had data intelligence, and I got in that game very, very quickly. That's what happens when you accidentally become really good friends with Alex from Sales Boomerang. We pioneered a CRM with them. You know what I mean? Like data intelligence, the second I could have it, I was in. Because one of the things that bothered me a lot was this concept that someone comes to us for a loan and they don't qualify based on credit. And if they were lucky, and this is an industry norm, if they were lucky back in the day, you might have passed them on to a credit counselor. But if they didn't qualify, you were just moving on to the next deal, because there was always a next deal.
Transaction focused, not relationship focused. On to the next file.
100% automated that from day one. So if somebody came in and they didn't qualify for credit, they were immediately moved into what we call the credit improvement campaign. And that taught them how to dispute any inaccuracies and build positive credit and do all these things. And it made the loan officer look like they were personally involved in getting this person to the next level. But the ROI on it, considering it didn't cost anything, was astounding. And then we added data intelligence. And so here's this ongoing campaign to make sure that the goal of this house actually happens. Loan officer doesn't even know what's happening. Then once the credit score hits a predetermined number, we are congratulating them on all their hard work, and we're pinging the loan officer and saying, hey, it's time to get this person pre-approved.
Get a hold of them. Make sure you reach out. And now the loan officer is excited about that system, because the system is giving them actionable leads, something to follow up on, instead of just this whole database that they don't know how to do. They don't know how to set up an email, and it's just a disaster. I have another question as we continue to dive in. Recently, and I'm running a poll in LinkedIn right now of what are marketers' biggest challenges in 2024. And the early results are reduced budget and lack of new leads. Talk to me about, in today's market, as they struggle with those two things, what are some of the ways that we can help them address this? I think really, if you boil down the theme of the book, it really is about what the future of marketing and mortgage is going to look like, right? Because if every marketer is absolutely correct. Right now, all marketers are drowning. Their budgets and their teams have been cut down 75, 80%. And it was hard enough to get the C-suite to align enough on a vision and really the what the marketing department should be doing before. Now it's impossible. And so I have to be honest, I don't even know how most mortgage companies are going to sort of flip that when rates drop and it gets busier. Because what we have to break is this model that the CMO's job is basically to create, open house flyers for a loan officer in Wichita. That's not what a CMO does. But because we serve sort of the sales, that's what ends up happening. However, if you want your CMO to do an amazing job, they've got to have the support of really talented people. So there's not the best way probably a marketer can be successful right now, and especially for the first 2 quarters of this year, is that you're going to have to utilize the free tools that you have. You're going to have to, you don't have a graphic designer, so you're going to have to get into Canva. You're going to be using ChatGPT, but my
goodness, for the love of God, please personalize what you get from ChatGPT. If I read one more blog for mortgages that starts with "in the competitive landscape of mortgage," it's like
it's the same old story. I do a class on how to personalize chat, and I agree with you.
Yeah.
So many people are just excited they have some tool that is going to start spitting out content. Well, that's better than them having to think, personalize it, really grease the wheels of these AI engines, and you can get a lot of great content. And I can probably do more, what used to take me 2 weeks, probably in 2 hours now, if I use the tools correctly.
That is kind of when I look back on, I owned this company for so many years at Motivator, right? And we were building websites, building content, really, really honing in, the voice and the social media and the email marketing, all of it, right? But I spent hundreds and hundreds of thousands of dollars on websites and website creation. Now, I could have a major mortgage company come to me today and say, we want to have a enormous enterprise level website, and we want a website for every single one of our loan officers. We want it compliant in all the states that they're in. We want them to be able to edit it, and we want it to be personalized, and we want this done in 3 weeks. I'd say, okay.
Right.
that's the world I live in
out
now.
there. And I think the key with the tools, a lot of people are like, oh, it's going to take everyone's job, this, and that, or any idiot can now be great at marketing. And I say the people that will win with the AI tools are the subject matter experts that master prompts and know how to personalize.
It is, when I think about marketing in general, right? And the first line of the book, it just tells you how much I love marketing. I love marketing because I never loved sales. I was naturally inclined to sales. My father's a salesman, and I just have the personality for sales. But it never made me excited. Marketing always makes me excited because what I love to find is what makes someone make a decision? What's the psychology behind it? And what matters to me about being in that relationship with the person? And so often, everything in mortgage is the same, right? Hey, we're going to give you a better rate. We're going to give you excellent service. We're different. We're
different because it's our people. Well, what the hell does that mean?
We use purple in our splash, or we do a lot of TikTok, and it's okay, none of I get that. Here's what I really want people to understand. What I'm trying to do as a marketer is evoke from a company what it means to be in relation with you. What are you literally going to do for me as a mortgage company to make my life better? And then how do you take that message and make it actionable across all platforms and make it accessible to all loan officers? How do you take that message and make it the drumbeat of what the realtor says when they're talking to that customer who says, no, it's fine, I was already pre-approved by my bank? If they're like, oh, okay, no big deal, then you just lost a deal.
Exactly.
If you instructed your realtor to say, listen, you got to talk to Kelly, just as a second opinion, because the thing about Kelly is she's going to listen to you. She's going to really listen to what you want to do. And she may not beat the rate, but at the same time, first of all, she's just a good person to know. And second of all, they bring something different than your bank brings. And I think that's a good conversation for you to have. That's the training they need.
Great insights. You and I can keep talking for hours. I do want to get to the book. You've just rolled out the book. Tell me about the book. It's Mastering Mortgage Marketing, Driving Growth in the Digital Mortgage Age. First of all, congratulations. I read it in one sitting. I absolutely loved it. As another person who gets super excited passionate about marketing, it was nice to see somebody share mortgage industry insights, where things are going. So tell me about the book. Tell me kind of what was the catalyst for you to write it, and then we'll dive in a little bit deeper as we start winding down.
Oh, I love this question because nobody's asked me this yet. This past summer, I'm a writer. I was born a writer. I've always been a writer, and that's why ChatGPT doesn't scare me, because there are some things that it can't do, and it can't write the way that I can. And you can always tell when I write something. I have a very clear voice in the things that I do. And I was challenged by a project this summer. And I started thinking about okay, what really makes a great marketing leader? And I sat down to kind of pen a blog about it. And I sat down, I was writing it, and I ended up having like the 10 things. And I think the blog somewhere even out, I think it's on the Mortgage Pilot's website. But it was like, what makes a great marketing leader? And then as I started thinking about it, I started thinking about the people who I've run across in consulting. I've seen so many different marketing leaders really be challenged because what they want to be in the C-suite and what they can be in the C-suite are two separate things. And because most of the C-suite is usually ex-originators, it can be really hard for leadership to say, here's why marketing is important. And if we don't get leadership at mortgage companies to understand how imperative their marketing team is, when we are on the precipice of data and automation taking over a tremendous amount of the industry. And if people don't believe that, I have no problem. I've been howling in the wind for years. I'll howl in it some more. But the reality is, like, the marketing team is about to become an extraordinarily important part of the process, because if I'm your CMO at a mortgage company, I'm probably going to get more leads for the company than referrals and leads are given to our entire sales team. That's the job.
Oh, that is so true. You mentioned in the book, one of the biggest challenges for CMOs is fighting to protect the brand.
Yes.
Tell me about that, especially as a lending CMO, and you have all these LOs, you have all of these branches. How do you give them some freedom to create content and do stuff and still really maintain the integrity of the brand?
I don't suggest that every CMO is quite as psychotic as I am when it comes to the protection of the brand, but we should all be. When you are in charge of a brand, when you're the CMO, this brand is yours. It's what you sell. It's what you create. It's the vision you have. It's the umbrella that we all stand under to not get wet in the rain. And you hold the umbrella. And if people don't look at it that way, that makes me heartbroken for those organizations, because that brand's never going to really mean anything.
Yep.
So if you have this brand, it has to be the most important part of the story. And as we transition from the way mortgage was to the way mortgage is going to be, the old school way of thinking of it was like, we will, you work at our company, but our brand's back here, and you're your own entrepreneur and you build your own personal brand. There's zero problems with that at all. The thing about a personal brand in conjunction with a corporate brand is you should be so aligned with this corporate brand and this ethos that you're really not going to be selling something that's tremendously different. These things shouldn't war. They should absolutely match up. And when you're putting together your personal brand, there should be some guidelines from the corporate brand that says, hey, you can totally have this brand. We do need it to be compliant in a variety of states that you're probably not thinking about. We need to make sure that this is correct for color and size and everything. We want you to put your best foot forward. This brand that a loan officer creates, whether that is in social media, whether that is just what their referral partners actually can kind of count on when it comes to working with them, that brand is obviously an incredibly important thing. But the concept that this brand is less important is, to me, insane, and also not the future, right?
Exactly.
Because we want our company brand to grow. We want people to see our logo and say, I know what this is. I used to call it the 3-year plan, right? Which is, one, the first year is like, who are you?
Right.
And then the second year is like, oh, I think I've seen you before. I think I did a deal with you. And the third year is, you're welcome. That's the third year. The third year.
Exactly.
I get it. I love it. And your brand makes my life better.
Exactly. Kelly, great insights. I got one more question I want to make sure that I get to. You talk a lot in the book about the importance of data in having a CRM, and that one of the mistakes that a lot of lenders are making is they've acquired a branch, they acquired other LOs, and they have multiple CRMs, and you really push that you should be on one unified platform, right?
I mean, I feel very confident in having that opinion, considering that I sat behind the wheel of the largest one at the time. And unlike other CRMs, it wasn't my job to sell more seats. I got to play in an incubator of data for 4 years, right? I got to see what happens when you do these kinds of things. But it never stopped more CRMs from coming in with new hires. But what I definitely watched was the tens and hundreds of thousands of dollars in technology support that is required when you're bringing all these
different systems.
And so here's the thing about compliance. Here's the thing about like a exhausted C-suite. Because when your marketing person isn't having to run down 7 different places to put the message, and you feel confident when you have an audit that instead of having to spend, say, 3 weeks going back and forth with loan officers, you can just pull a report from one central system that shows every bit of communication that's gone in and out.
So I couldn't agree with you more, but here's one of the pushbacks I hear all the time from loan officers. Once I put that data into the corporate system, it's now their data. And I don't know if I'm going to be here 6 months. I don't know if I'm going to be here 6 years. Why shouldn't I just use my own CRM? How do you respond to that? Because I'm sure you've heard it just as many times as I have.
A million times. And here's kind of like, I hate, because I always feel like I have to bust their bubble, and then they're always so sad when I finish. And I'm always like, very valid and true, except here's the fun fact. They also have it in Encompass. They also have it in HomeBot. They also have it here, there, and everywhere, because every time you put your database in anything and the company's paying for that thing, they already have access. Chances are pretty high that if you have a CRM that is in any way paid for by your company, they also have an agreement to keep your data. So you don't escape your data being taken by the company just because you use your own CRM. The only thing that I ever agree with is if your company doesn't take CRM seriously and isn't bothering to advance tech, 1, you're at the wrong company. You better jump now. And 2, you should have the tools that you need to do your job. Okay, so if you don't have a CRM, okay for the CRM. If you are really serious about taking every advantage that you possibly can in the next 5 years of mortgage, that's the window I think all originators should really be focused on, is the next 5 years, because it's going to determine what your career is going to look like.
Correct.
Work at the right company. Before you ask about BIPs, before you ask about anything, the first question I want you to ask is, how are you going to support my growth? Give me the spin. And if that CEO doesn't understand technology, run as fast as you can. Because
great insights, Kelly. You and I could talk for hours. I will definitely have you back on the show. For anyone who wants to get the book, go to Amazon. It is a great read. So many good insights. Kelly, I can't thank you enough for being a guest on this episode of the FinTech Hunting Podcast.
Thank you so much.